All right, this is the last time I'll be making one of these videos, not about the company that I'm covering, but rather the idea that Cathie Wood is selling out. Because after today's sale or yesterday's sale, it is quite obviously to me that she's liquidated the position. Cathie Wood sold another 300,000 shares of Spotify. The reason I'm going to talk about this today is because Spotify just had their investor day. Now, if you go to the market stream that I did in the morning, 9:20 a.m. Eastern, and you go to the end of that stream, I live streamed the first, I would say, 25 to 30 minutes of their investor day. I went through a lot of their stuff. I'm still going through it. It kind of validated to me the story around where they think they're headed and why Cathie's liquidating. Now, let me set the disclaimer here. First, let me just show you guys that Cathie's liquidating. So here we go. ARK Invest trade activity from June 7th. 264,000 shares out of the RKK fund, which is the biggest fund that she has in the context of Spotify. She has 922,000 shares now. She had about like 2.3 million a couple weeks ago. That's a big sell, and then 60,000 in the ARKW fund. So it after today, it seems quite obvious to me that she is beginning to liquidate the position. She doesn't believe in the growth company anymore. I mean, she after selling 1.4 million shares within the past week and a half, this is not just selling to get cash to buy something else. This is liquidating the position. This is getting out of it and seeing what else you can get into. Now, on their investor day, I probably might do some more videos a little bit later covering this if people are interested, but I tried to understand what they were trying to sell. And this is the story that Spotify is selling. They have created an ecosystem in which they believe that audio content can stick with a user and increase the lifetime value of how that user engages with the product. Now, there's two ways a user engages with the product in order to be able to make money. There are subscriptions or there are advertisements. Subscriptions is what I believe, and I think it's pretty obvious, the public markets are valuing Spotify on, which is how many users can you get to pay that $10 a month, and then how profitable can that $10 a month be at your bottom line. Very similar business to Netflix model. Pretty straightforward at the end of the day. How much do you pay to get a user? How much time do they stay on the platform subscribed? And then how much profit are you making off that subscription? The second model is an advertising infrastructure. Now, the public markets are not valuing Spotify on ads infrastructure because they haven't shown that they can actually produce the advertising results that are necessary to be valued as an ads business. Facebook, Google, Amazon made $30 billion off ads last year. So like Facebook made $120 billion, Google, that's their entire business. These are companies that offer a lot of things, but at the end of the day, they really do thrive on advertising businesses because they're able to centralize attention and effectively target the operations for someone to reach another person, which involves advertising. Spotify's trying to do that in audio, but the problem is they don't have the level of consumer attention, and it's a little weird I say that because they have 500 million people kind of using their service, but they don't have the type of consumer attention that is necessary to really monetize effectively with advertisements. Now, maybe they get there over time, and they were trying to sell that story in the investor meeting today, but that's not what investors care about. I mean, investors care about, okay, you have 182 million paid subscribers. How much more can you get? Remember that the stock DPO'd at $165 and now it's at $101. So it's been the past 3-4 years, they grew probably 30, 40, 50 million subscribers and the stock is still down. And it's not just a question of the market being down. It's a question of they're still producing operating losses. So you get all these subscribers, you're getting them to pay, but you're not profitable. Well, what is the reason for this? One of the big things I think it's important to understand around Spotify, and we'll get to why Cathie's selling it in a second, is because a lot of their premium subscribers are also in different parts of the world. So if you're in India and you're paying $3 a month for Spotify, that's not the $10 a month in North America, which means the margins are going to be horrible. They're obviously losing money on you as a subscriber. And the idea is to keep you hooked in the ecosystem so that eventually you pay a little bit more. The question is how many of those people will actually pay? And the question is, will those people paying actually be profitable for the company because their gross margins kind of suck? And the reason their gross margins suck is because of the fact that they're in the music business. A lot of their money goes back to record labels and royalties. So they're trying to find ways to like expand outside of that. The other reason the gross margin sucks, and they literally admitted it today that our gross margins suck, is because they overinvested into podcasts, meaning they've overinvested, not in a negative way, but they've just really gone into podcasting to be able to say, hey, if we invest $800 million, almost $1 billion, will this pay off in the long term, even if we have to give up short-term profitability for our margins? Now, that is what was says in the investor day. Nothing really interesting was said. Nothing really innovative was said. They kind of just go through a lot of metrics. They go through a lot of numbers. And I mean, there was nothing unique. There was nothing like Spotify's changing the world today that was announced at their conference. Why is Cathie selling it off? I think Cathie has come to the conclusion to realize that their paid subscribers is not going to grow at the rate that she thinks it's going to rate, or that people thought it was going to grow. Now, is this a crappy reason to sell off a stock? Yes, I agree, because it's like you have this 5-year horizon. You've held it for 2 years. You held it when it was really good. Now you're selling it off at a loss. It sucks as an investor as you see her strategy around it. But nonetheless, you got to cut your losses where you cut your losses. And I think she's recognizing, and her team is recognizing, Roku is a platform. And as a platform, there's a lot of opportunities there. Teladoc is a platform for doctors, and there's a lot of opportunities there in virtual health. Is Spotify a platform? That is the question. That is the investment thesis. I think if you're trying to invest in Spotify as a company, you have to ask yourself that question. Is it a platform or is it a publisher? I see Netflix as a publisher. They buy content and they publish it, and you pay them for that content. That is exactly what Spotify is doing. Now, Spotify's argument today in the Investor Day was that they are a platform. And the number one reason I think they didn't show that they were a platform today, they really didn't prove it to me, is because when you're a platform, especially a creator platform in the creator space, you highlight your creator. So when YouTube does a conference, they, like Colin and Samir, they're guys who had like 30,000 subscribers a couple years ago. Now they have 800,000. They do creator interviews and stuff. They put them front and center. Mr. Beast front and center. Like, you take these random people in the world and you give them this massive audience and massive attention, not only through your algorithm on your platform, but also at these conferences. And you highlight, hey, these are people that we believe are driving our brand and our product and our platform forward. Spotify today did that with Call Her Daddy, with Joe Rogan, with their Marvel, DC, whatever partnership originals, with their exclusive content that they've done with all these different celebrities, armchair experts. Like, they've done all the promotion I saw today, and if you watch the Investor Day, you'll see this, was all Spotify originals, all exclusive content. And I think the number one reason for why Cathie Wood is selling off the stock is the same number one reason for why for why I think they messed up in this investor conference. You cannot be a creator-first platform and say you care about creators, and then you're highlighting all of the exclusive content you bought. Mind you, you bought that exclusive content and it screwed your gross margins. So now either that exclusive content is going to drive subscriptions or it's going to drive ad revenue. And how much ad revenue is that going to drive to justify paying $800 million for all this stuff? And how many subscriptions is that going to drive? Because, by the way, you can access those podcasts because they're a podcast. They're not behind a paywall without a subscription. So I think that's the fundamental question. And ultimately, when I, entered into the ecosystem of this Investor Day and tried to listen and try to understand, I really tried to be more optimistic about this. And I'm like, I don't understand it. Like, I just don't get what the vision is here. You're going to keep buying all this exclusive stuff. You're going to highlight your exclusive stuff. What if people don't want to listen to it? What if people one day don't want to care about Joe Rogan? You know why you're always going to care about YouTube? Because there's always something new to discover, and the YouTube algorithm figures out how to get you to discover that. And people want new stuff. It's why we get bored so often. We're just like monkeys. We need more and more stuff to be able to see. And so we want new content. That's why TikTok is so good. But in the context of this exclusive premium stuff, if you're pushing that down our throats, I think it's not the best strategy to get people to discover your content or to get people to subscribe. It's like, what am I paying $10 a month for? And if it's for music, it sucks because the music business is crappy. All the royalties go, like, there's no leverage there. There's no margins. That's why they went into podcasting, because they were like, can we own a piece of content that the record labels don't have their hands all over? So I think, there's nothing interesting in the Investor Day that I thought was uniquely innovative here. And I think Cathie Wood is recognizing, well, they grew 2 million premium subs last quarter. It was a 2% growth from the last quarter. It's like, are they going to be able to grow 20, 30% year over year? They already grew 50, 60 million subscribers. Can they get 400 or 500 million people paying for the service? I mean, they'll get them on the freemium version. Will they get them on the premium version? I think that's the question she's struggling with, which is why she's liquidating the position. I mean, it seems very obvious in the next couple of days, we're going to see that the position is done. And she's allocated more of those resources into her higher. I mean, she bought a lot of Roblox and Roku over the past couple of days. So she's putting her money where her mouth is when it comes to higher conviction stocks. She's selling the stocks that it seems like are going to follow a similar trajectory around subscription-based services that are not platforms at the end of the day, which means if they're not a platform, they're going to be hit harder in the recession because people just don't care about paying that money anymore for the content, especially if the content is a commodity. So if there's not a unique, innovative way in which the content gets discovered or recommended on the platform, is the platform actually innovating when it comes to content? And mind you, if the platform is not getting creators discovered, I don't think it's a platform. Whether it's audio, video, text, whatever it is, you've got to build a recommendation engine to get people discovered. I see Spotify is buying all this exclusive stuff, feeding it to audiences. If that's not translating to premium subscribers, which is what I think Cathie Wood and her team thinks, then eventually they're going to sell off the stock. So those are my thoughts. Let me know what you guys think. Remember that Cathie Wood has had the stock in her top 10 position for a while now. So I don't want to say she has more information. I just want to say that if you put in God knows how many hundreds of $1 million of the stock when it was trading at $200-$300, it means you know something, or you really believe in something. And same thing with Palantir. Whether I like it or not, she sold Palantir and she was right when she sold it. She sold it at $12 and went down to $6. I don't agree with her long-term thesis, but she sold at the right moment. So I mean, if her team believes there's going to be slower growth or there's going to be something going on with Spotify that their thesis had not accounted for or that changed their thesis, then that might be a reason ultimately why they're liquidating the position, and we're going to see what happens. So thank you guys for listening. Let me know your thoughts in the comments. Let me know what you guys think about them liquidating the position. Let me know what you guys think about Investor Day. You can catch my reaction to it at the end of the 30 minutes of the morning live stream today, and I will see you in the next one.